Greek banks have lost up to 30% of their value after the Athens Stock Exchange went into free fall on reopening for the first time in 5 weeks. I'm joined by economist Anders Aslund, who's a senior fellow at the Atlantic Council in Washington. Thanks for joining us. Now, of course, these markets were only going to go one way, but what's your sense of the scale of this drop?
My sense is that this was actually quite good. Here in the United States, there is exchange-traded fund for Greece, and it barely moved today. It went up slightly. So it said the Greek market is down 17% during the last 5 weeks. That's where we are, and this is perfectly stable. So I think, as strange as it may sound, that this was a success for Greece. This showed that the market has stabilized, even if, as you said, there was a massive fall today, in particular in the banks. But that fall had already happened in the closed markets. So
this was a hit they had to take. The timing of the markets reopening, do you think this was right 5 weeks on? They had to get on with it?
Yeah, given that we saw that the US proxy for the Greek market barely moved today, it showed that this was just the right time. And they succeeded doing it. And now the next thing is to open for other markets.
So do you think we'll have some stability? Although we've had a significant drop, biggest in 30 years, do you think we'll now see the markets rallying a little?
That would to take it a bit far, but the point is that perhaps we saw the bottom. Perhaps the Greek market will now stabilize and then gradually move upwards.
How do you think this will play out for the negotiations? We're still looking at finalising this 3-year bailout deal. Will they now look at these markets? Will this add to the credibility of the Greek case then, that the markets have done what at least you thought they should do?
Well, the basic sense is that the expectations have been realistic. There's now a discussion that about 20 billion euro will be needed for recapitalization of the Greek banks. And that was anticipated in any case. So it's more fine-tuning what are the exact numbers, and the measures that the European Union imposed upon Greece seem to be sensible. Most of the fiscal adjustment, that is the budget cut, has already been undertaken. The big issue now in the summer has been to impose sufficient structural reform upon Greece so that the country can grow again. And then what Greece and all these American macroeconomists demand is that the European Union cuts some of the Greek debt. My guess is that will happen.
And taking all that into account, do you therefore think that what seems to be a very real danger of Greece leaving the euro, that's now set aside? We don't have to worry about that?
I wouldn't say that, but the risk is much less than it seemed, say, 1 or 1.5 months ago.
OK, Anders Aslund in Washington, thank you very much for your insight this morning.